The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
It's Chuck, Paul, and Tucker with you, and we got a jam-packed day today. Things that are on the calendar. We've got a Fed meeting. Exciting one, too, might I add. We've got earnings happening today. A tiny little company called Insperity reporting earnings today that everyone's all excited about. If that one doesn't get you excited, something called Q2 is reporting Q2 earnings, which
Timely.
is fantastic. I don't know what they do the rest of the quarters. And MYR reports earnings as well, so we're pretty jacked up about those. Not so much about Microsoft and Meta. Everyone gets excited about those, but the other ones are what you really have to appreciate if you're a real fan of the deep cuts. If you're not, jazzed up about earnings, we got oil prices that we're going to be talking about. And if that doesn't do it for you, then honestly, go watch the rain. Like, I got nothing. There's something for everyone today. We're going to kick things off talking about oil, which is just this ping-ponging back and forth of down, 10% for a couple days, now back up 7% today. And I come back to the same place I've been in since March, which is, look, there are, just among the principal players in this, the United States and Iran, there are some pretty big disagreements that exist on some pretty big items. Beyond that, you have, just within Iran, some disagreements as to how they should handle things. And this is before you then get to the thoughts of, parties such as the Israelis, the Saudis, the
Oman with the Strait.
Oman, Qatar, Iraq, which is now taking fire from both Iran and the United States and Saudi Arabia. And so you're kind of like, okay, how's this all going to wind up? And I pretty much get to the point where I've been saying this since the beginning. Iran wants to inflict enough economic pain so that the United States or anyone else never tries this again. Mm-hmm. The United States wants to be able to come away with a significantly degraded Iran to the point where they can't cause problems in the Strait of Hormuz or the region for anyone. Israel, depending on the day of the week, either wants Iran completely debilitated or still kind of there as a threat that they can, use to, work things in the region going forward. Iraq is just trying to hold together and is on the verge of civil war, might I add. You've got the Qataris who really just want to be mediators and, friends with everyone and run some money on the side and, move things around and, kind of be the power broker in the region. I'm not really sure what Oman wants, if I'm being entirely honest. The UAE basically is just like, here's a bunch of money, Iran. We just want to ship oil, through pipelines to avoid you from now on. Just don't shoot anything at us. And so you're left wondering, hey, how painful do things have to get for all of these actors to finally just say, enough's enough. We were better off when we weren't fighting and could just make our money on our own. But it doesn't feel like we're there yet.
No, it certainly doesn't feel like what are we at, 5 months or so is
5 months yesterday, yes.
Yeah, is enough time to resolve that. There are just so many different factors at play, like you mentioned, that make this just really hard to try and figure out what direction this goes. I have finally taken the approach over the last few months where I keep apprised of the headlines and the developments, but really don't put a lot of stock into anything. And I think you've used the phrase on the show a lot, Chuck. Let's see the actions, not the words that are spoken from either the U.S., Iran, or any of those other parties that you just mentioned. It is something that we, as hosts of Financial Exchange, want to keep investors and listeners apprised of the developments. But ultimately, it's hard to add a lot of real, feedback or constructive notes to this subject, because it just becomes so hard to really figure out in which direction it's going to go. I mean, energy prices alone have baffled. I mean, they've always been hard to predict, but this year just incredibly baffling. Like you mentioned, we're up 7% today. We were at close to 100 on Brent maybe last week. It all just, the action blurs together really fast.
I've started keeping a calendar.
Okay.
Like, legitimately, I have a separate Google Calendar that I have that is literally just titled, it's literally just titled Iran War. And so, like, it's a separate color code. And basically what I have here is, something where, okay, I can actually go back and say, this is what happened on this day, and this led to this, and this led to that. Because otherwise, there's been 46 different, we think we're making progress on a deal, to we're going to, get rid of everything. Like, it's just, I've been through so many of these cycles that it's hard to keep track of at this point. And so I think it's instructive to be like, this is what happened militarily today. This is what was said. And is there any pattern that we tend to get to? And I think that's, how I'm trying to sort through it. And as I've said all along, like, I don't know exactly how this ends, but games of chicken are inherently an unstable equilibrium. It's not something where you can point to and say, this is how it definitively ends. It's pretty much when one side finally says,
no mas.
We've had enough,
yep.
we're done. And doesn't really seem like any side is at that point right now in terms of where things stand. The latest, I mentioned Iraq. I got to tell you, like, it's hard to picture a country just that has been more screwed up by foreign influence than Iraq over the last 100 years. And basically, it's on the brink of civil war right now. The latest what we have, and again, this is just how confusing things are in the Middle East. There is a group within Iraq called the Popular Mobilization Forces. The PMF is what they are known as. And they are a paramilitary group that operates in Iraq with the backing of Iran. During the 2010s, the PMF was actually one of the forces that helped to defeat ISIS in Iraq and up into Syria. Which you'd be like, oh, like, great, like, this. Now they are the ones that are, launching missiles and drones into Saudi Arabia and at U.S. bases from Iraq because, again, they're Iranian aligned. And, for obvious reasons, the Iranians didn't really get along particularly well with ISIS. And so it made them kind of a useful force in one respect that actually got a little bit of support from the United States during that time because, hey, like, great, you're fighting ISIS. The problem is that generally, like, they're not aligned with U.S. interests long term, and that's, kind of how things look here. And so since, like, 2019, I believe, key members of the PMF have been designated terrorists, and portions of it are designated as terrorist organizations. So this is how these things evolve over, like, 5 to 10 years, is one of the forces within Iraq that helped to defeat ISIS is now lobbing missiles and drones at U.S. and U.S.-affiliated forces. It's messy, and this, like, none of this just goes away tomorrow. You don't just, like, put this back in the bottle and you're like, oh, like, this is done. Like, this is a continued problem here. So let's take a quick break, and when we come back, we'll move on from oil. I want to do a little bit of previewing of this Fed meeting because I think it is one of the most interesting Fed meetings, not necessarily the most important, but most interesting ones that we've seen in recent history.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Fresh, local, in season. Celebrate National Farmers Market Week, August 2nd through 8th. Visit your local farmers market for peak summer produce, from sweet corn and heirloom tomatoes to peaches and blueberries. Every purchase supports local farmers, strengthens your community, and helps keep fresh food accessible across Massachusetts. Sponsored by Mass Farmers Markets, supporting over 200 farmers markets statewide. Find a market near you at massfarmersmarkets.org.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
We've got a Fed meeting today. 2 p.m. we get the information as to what the Fed is going to do with interest rates. And the interesting piece here is heading into this right now, as of this particular moment in time, again, like you look at it, and it's pretty uncertain as to what the Fed does here. Right now, according to the CME, it's basically a 70-30 split as to whether the Fed is going to hold 70% versus 30% chance of a hike. And the only time in the past 15 years that we have seen similar odds being priced, there's three other instances. The first was in September of 2024 when the Fed unexpectedly went forward with a 50 basis point cut. The other one was in 2019 when the Fed was deciding whether or not to pivot late that year. And another one in 2015 when the Fed was deciding whether or not to start hiking interest rates. So this is, kind of again, I've mentioned, like, there aren't many instances where it's been, kind of really up in the air as to what the Fed is going to do. And I do think it's important to talk about what this means, because let's say that the Fed decides not to hike interest rates. Mm-hmm. If you have a 30% chance of a hike being priced in, then that means that the Fed is implicitly easing, because they're taking that 30% off the table that the market's pricing and saying, we're not going to do it. It's easing versus what the market expects. Likewise, if they hike, it is a firmly, more hawkish position than the market is expecting either. So either way, the market's going to be surprised. Mm-hmm. The place that I think, if I were Kevin Warsh, and I'm thankful each and every day that I'm not, because I don't think I'd actually want to be the Fed chair. I think that would just be too much pressure for me, if I'm being honest. Like in
a very thankless position too.
Well, no one ever likes you. If interest rates are too high, people are like, no one can buy houses because the interest rates are too high. That's what everyone sounds like the last 3 years. And if interest rates are too low, like the 2010s, then you get people going, you're not letting us earn enough on our money. You're punishing savers. And it's like, okay, well, tell me what the right interest rate is then, man. I just, no matter what, everyone's upset at you. So no, it's not for me. I like jobs where at least one person's happy. Just at least one of them. So if I were Warsh, my approach would be, hey, the bond market is kind of running away from me right now. The long end's been moving up. Real interest rates have been moving up over the last, month or so. My approach would be, hey, I've been talking a tough game. Mm-hmm. I've been saying we're not going to tolerate inflation. I got to send a message to the market that we're not going to tolerate inflation. And it's not just what I say. It's got to be what I do. I'm going to hike. Mm-hmm. And so I think that the counterintuitive place that we land if that happens is, if Warsh hikes, I think the long end comes in, because the message that's being sent then is,
taking this seriously.
I'm willing to punish growth in order to rein in inflation, and y'all better listen to me, because otherwise you're going to be off sides on this.
Right.
If Warsh doesn't hike here, I don't think there's too much risk of the long end blowing out too far, but I think you probably see the long end actually rise a little bit, because it's, well, Warsh is talking a tough game, but he's not really doing anything. And granted, this is, the first, his second meeting. So we're not going to do too much, but, it doesn't seem like he's willing to put his money where his mouth is yet if he doesn't hike here. So I think that the healthiest thing for the bond market is Warsh hikes today. I think if he doesn't, it's not a huge deal, because he still has a little bit of runway in this and that. But if I were Warsh, I'm coming into today's meeting with everyone and I'm saying, y'all better get behind me for a hike, and we'll go with that.
Yeah, I think that's a key point to end with, is that you got to get the votes, right? You got to have everyone
I don't know if he has
on board with you. And 2 months into the job, where you have this eclectic mix of appointments from different presidencies across the board of governors.
But you always have.
Yeah, you always do. But and 2 months into your tenure, are you going to be able to rally support if you think that increasing rates is the right way to go? I said that yesterday too. The sentiments on this is the most anticipated Fed meeting that I can recall for as long as I've been doing the show with you guys where I don't have a good feel for what could happen. I could kind of see it going in either direction because of one side that says he's really been talking tough. This is his time to show it. But the other side sort of acknowledging the fact that, hey, we had a pretty weak inflation report for the month of June. I totally get it. A lot of that was influenced by the fact that energy prices have been whipsawing around like crazy. But we do sit at 3.5% inflation year over year. Is there the case that after that report, a lot of people were sort of earmarking, okay, September is when action will really occur? And there's been some movement there on even the September front. I was looking this morning, the idea of a 50 basis point hike in that September meeting came up a little bit over the course of the I guess the last day or two, but just a tremendous amount of movement on the interest rate front, and something that for the first time in a long time for me personally, I'll be at least keeping an eye out for what this meeting looks like at 2:00 today.
If I were Warsh, I hike today, and then I take like one question in the press conference and just leave.
Belichick style.
That's what I do because look, I'm a big believer in if you really want to know how to central bank, if you want like central banking for dummies, you don't look at what the Fed's done or the ECB. You want to go and be like, hey, show me what like the Brazilians do. Because unlike, here's the thing, if the Fed makes a mistake, ultimately everyone in the world still needs to own US dollars because it's how you do business. Mm-hmm. If the Brazilian central bank makes a mistake, they're screwed. Like everyone's just like, nope, don't want to own any reals right now. Like we'll pass on that. Like show me EM economies and how their central banks operate. And what you learn from them is, hey, it's almost always better to occasionally bop the market on its head and keep it in line than let it get out of control. Because once it gets out of control in those places, you can't put it back in the bottle. It's like you're done. You've lost. And so that's kind of how I look at this, which is, look, the U.S. bonds never get too out of control because, again, we're the United States. But if you want to make sure that you stay that way, occasionally you got to bop the market on its head. And I think this is an opportune time to, because I think the U.S. economy is still strong enough to be able to deal with it. And quite honestly, if you end up bringing that long end in and bringing down long-term interest rates by virtue of hiking here, it actually can inject a little bit of juice into the U.S. economy if there are any questions that are going on in the short term. And then if you got to hike again, you've already set yourself on that path, and now you've got credibility, which is what matters. So that's how I look at this, and I don't know what they're going to do, but I suspect the market is underpricing the chance of a hike because Warsh, I don't think, is a dummy, especially like he's got a direct line to some of the smartest people. He's a Stanley Druckenmiller guy, and Druckenmiller is, again, kind of as plugged in and as influential as anyone in the financial industry. And I think that coupled with the fact that you've already had some voices talking about, yep, like we could be willing to hike. I don't think he has to get too many people on board there to do so, but we'll see. The counter to that is Warsh has been, a big proponent of talking about, hey, I think, AI is going to lead to this productivity boost, and so we don't need to worry as much about inflation. That's the counter. Which one wins out? Well, we'll see later today. Let's take a quick break. Wall Street Watch and Ask Todd are next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, Be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are selling off ahead of a busy afternoon where the Fed will announce a decision on interest rates at 2, followed by tech earnings from Microsoft and Meta after the bell. Furthermore, oil jumping higher after Iran targeted a U.S. base in Jordan. Right now, the Dow is selling off 1.5% or 808 points lower. S&P 500 down 0.75%. NASDAQ down about 1% or 238 points lower. Russell 2000 down 0.9%. 10-year Treasury yield is up 2 basis points at 4.62%, and oil jumping over 6.5%, trading at $84 a barrel. Procter & Gamble reported second quarter earnings that beat expectations but came up short on revenue as underwhelming demand for its products weighed on sales. That stock down by 2%. Meanwhile, shares in AI infrastructure company Vertiv are sinking 13% after it reported mixed quarterly results where earnings and revenue beat, but its revenue year-on-year organic growth disappointed. Elsewhere, GE Healthcare Technologies is surging 11% after it beat earnings expectations for the second quarter and reaffirmed its full-year earnings guidance. And Ford is up by nearly 5% after it reported mixed second quarter results, but still hiked its 2026 outlook, saying it was confident customers would continue to buy pricey pickups and SUVs. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
As promised, we got Todd Lutzke with us here now for Ask Todd. Why do we call it Ask Todd, you ask? Well, we call it that because this is your chance to ask Todd your estate planning questions live on air right now, this very minute. Last week we got through 4 of them. Usually we get through 2 or 3, but phone lines are open at 888-205-2263, so get calling to make sure you get in line to ask Todd your questions. Not sure we can make it a drive for 5, but we'll see if we can get through 5 calls. But 888-205-2263 is the number. Again, that is 888-205-2263 for your chance to ask Todd your estate planning questions. Mr. Lutzke, how are you doing today?
I am never better. You?
It's good. I'm getting excited, actually.
Yeah, what's going on?
Topsfield Fair is coming up in a couple months.
I've heard that's a good place. Good
fun.
The
world's biggest pickle is going to be there this year.
Really?
Mm-hmm.
What's
a lot of people kind of like, okay, I don't get the hype, but I think it's a pretty big deal.
It is. It's a pretty big deal for sure.
Yeah, that's my thought. Todd, want to talk to you a little bit about irrevocable trusts. Is it irrevocable or irrevocable first?
I don't know. Is it potato or potato? I don't know.
Either one's okay.
Let's call the whole thing off.
Okay. So irrevocable trusts. Who are they not right for? Like, who's the person who you look at and say, you either shouldn't be looking at this or this would work out badly if you use this tool?
So the question is a little broad, but let me answer it this way because there's many kinds of irrevocable trust. And I think that's important in your question, Chuck, because a lot of people don't realize that.
Sure.
They might hear us talking about these Medicaid irrevocable trusts and think that that's the only kind that there is. But that's not the case. So there are many different kinds. So in answering your question, the different kinds of trust will apply to different people in different situations.
Okay.
So let's start on the high end. Let's assume you have people that have, over 15 million, right? And or even pushing higher than that.
Okay.
And are interested in giving away assets, getting assets out of their estate for estate tax purposes. Even doing that while they can retain control, believe it or not. There's ways to do that with these spousal lifetime access trusts. Well, that would be for higher net worth people, or we would be talking about irrevocable grantor spousal lifetime access trusts or gifting type trusts.
Okay.
So I think that's one category. Let's dial it back and say, well, what if we're in the under $4 to $5 million range? Probably, you're around that $2 million number for mass, or maybe you're married or you're $3 million. More and more people might be fitting into this kind of category. And so what would we do for them? Well, I might consider the irrevocable Medicaid type trust, which is the one we actually are talking about more frequently and today, in fact, as what's laid out in the guide. And again, I would say it would be right for them, but not if they're 40. So then you got to look at their age. So you got to not only look at the net worth of the individual, which drives the kind of trust that you might need, but also their age. So I would say, rule of thumb, 65 is a good time to say, if you're doing your planning, I would ask, are you concerned with protecting assets from the nursing home, to try to learn what kind of irrevocable trust is right for you, or if not, then we would go with revocable type trust. So that would be our first concern. Maybe they're not even concerned about that. Well, if that's not an issue, then we would do revocable. So I think it's a function of age and then net worth. So and those are the two main kinds of irrevocable trusts.
Talking with Todd Lutzke from the law firm of Cushing & Dolan. Still have room on the phone lines for your estate planning questions. 888-205-2263. That is the number to call to ask Todd your estate planning questions live on air right now. Again, 888-205-2263. We're going to take a quick break here, but when we return, we're going to get right to your questions with Todd. That phone number is 888-205-2263. One more time, that number is 888-205-2263.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder. until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
Talking with Todd Lutzke from Cushing and Dolan. Remember, we call the segment Ask Todd, so you can ask Todd your estate planning questions. 888-205-2263 is the number. Still a bit of room on the phone lines. Again, 888-205-2263 is the number. Let's go to Sean in Monson. Sean, what is your question for Todd?
Good morning, guys.
Morning.
Hey, Todd, long time listener. My wife and I started doing some planning, and I don't know if I'm going to say this the right way. Someone said to her that you get a revocable trust and then convert it over to you start with a revocable, and then you slide it into an irrevocable trust.
Okay.
We're looking primarily for an irrevocable Medicaid trust, grantor irrevocable Medicaid trust. Does that sound right to you, or?
So let me ask you a couple of questions to,
Yes,
try to get a feel for the whole situation. So you're married, I assume, with children?
Yes.
Okay. And total value, give me a round number. Real estate money, IRAs, net worth. What are you under 4 million? Over 4
Yes, sir.
So over 2 million?
Yeah, no, sir.
So somewhere between 2 and 4 million. So that's an important number, right? Not only that. And how old are you?
I'm 67. My wife is 60.
So I'm going to try to say this as politely as I can. I would, if we had met for the first time, I would have asked you these questions and many more about the type of assets and family dynamics. I mean, we would have walked through a whole bunch of questions. But it's these questions, it's the net worth, it's the age, it's the family dynamics that help us determine what your objectives are, right? And so then I would say, okay, you're here to, avoid probate. You probably say yes, right? If you're at 3 million, I would say we want to make sure we don't give Massachusetts any death tax. Likely you would say yes. And then I would say, we want to get a bloodline plan to the family. And my last question would be, because of these factors that you gave me, age, net worth, I would say to you, are you concerned about protecting the assets from the nursing home? And your answer would be what?
Yes, sir.
Okay, so we've got 4 yeses here. Now, knowing that, I would then proceed to what is known as my whiteboard, where I would explain to you and your family how the irrevocable trust works. Okay? So why on earth would I ever, and so I'm trying to do this in a polite manner, why on earth would I ever even introduce a revocable trust when it's clearly not needed, based on your answers to these questions? So I don't know if he's trying to sell something that's just not needed, and then you got to pay again to do an irrevocable trust. I don't know. Number one. Number two, if the goal is protecting assets from the nursing home, if I want to get that 5-year clock started, I would think I'm 67. I want to get that started as soon as I can, so that by the time I'm like 72, this is in my rear view mirror, and what I put in the trust is fully protected. So if I did a revocable trust first, anything that I would put in there would never be even starting that 5-year clock to run. So I'd be actually just wasting time by putting assets in that trust so that later on I can pay money and convert it to an irrevocable trust. And how long am I going to wait? Do I convert it when I'm 70? Now I got to get to 75 before it's protected. So you're starting to see the sort of the logic here.
Yeah, it was presented to her where it would be almost very shortly after drawing up the revocable, then it would turn it over to an irrevocable.
Did he say
in a very short period?
Why would we need that revocable to begin with? That's the part I'm lost on.
To me, sir, I've been listening to you for years, and it didn't sound right to me. So that's why I'm waited till today, and I'm going to call and ask Todd.
All right.
So,
well, if I can help, let me know, and we'll take it from there. And so
very good, sir. Great.
Appreciate the call, and thanks for listening. So, folks, I think his call is really, timely and spot on to what we're doing with our guide, right? This month, the guide is unlocking the power of irrevocable trust. And like Chuck said, don't just say the word irrevocable, but this kind of irrevocable trust happens to be the one that is designed to protect the assets from the nursing home and is the one I was referring to the caller for Sean here. So that's exactly the kind of trust that I was describing to Sean. So folks, these trusts, the biggest fear people have in them is that they lose control. And I can't stress it enough that you really don't. But there's no way to really believe us other than maybe get the guide and learn. This guide in a question and answer format will walk you through, how it works while you're alive. What can I put in it? Can I put rental property in? Can I collect the income? Do I have to make a gift tax return? Do I have to pay income taxes at a separate rate? How does that work? How does the estate planning work? Folks, it's really not just about probate and taxes in this guide, but how it really operates for you, and will your life be disrupted by having it? So please call and get it. We're getting near the end of the month here, folks. If you've never known whether or not these irrevocable trusts are right for you, if you read this, I think you'll be able to decide it is or it isn't right for you. 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com. And you can always go to Cushing Dolan PC, our Instagram page, for more information.
Todd, when we talk about those irrevocable Medicaid trusts, are there instances that you find where they do need a long-term care policy in an estate plan as well in order for things to work out optimally, or is it one or the other?
That's a great question. So, obviously we're a supporter of long-term care and insurance. It's a good product to have if you can get it, right? That's sort of the caveat behind this, right? Because they can be expensive. You can't wait too long. You got to get it when you're much younger these days. Otherwise, the insurance folks won't give it to you. I don't know what the minimum age is, but I bet 70 would be too late. So I'm thinking 55 is a good time to get it. Now, having said that, if you happen to get it, and again, it's a Cadillac policy or even one, as you said, Chuck, that might just be there to aid or help with the process. You can get kind of a middle of the road type policy. So if you already have one, keep it. That's, if you can afford it, it's probably helping to do exactly what Chuck said. And that is, provide some assistance to in-home care perhaps, or, if I need to pay a little bit of money for the nursing home, it helps. So keep it. That said, it's never really the end-all, be-all. So while you could do irrevocable trust planning and not have insurance, and that could work.
Sure.
Okay? I don't believe the reverse is true. So I would not be saying, oh, yeah, I have long-term care insurance, therefore I don't need to do any planning. No. I would say that that's a supplement, and you should put as much into the trust as you can, get it protected. Nice to keep the supplement, but remember, it's not likely going to protect every thing you have.
What's the reason for that? Is that just because of the limitations of the policies? Is it because of the potential for longer long-term care stays? Like what's the main reasons?
I would say you're right. It's oftentimes these policies are not paying out $16,000-$17,000 a month, so it's not covering it, but it can be supplemental, as you said. It can be helpful to have it. So I would say getting it is not a bad idea if you have it. But and again, some people say, well, I'll take it out because I heard it protects my house. If I get at least, I think it's $125 a day payout for 2 years, it protects the house. Well, it might help protect the house, but nothing else. People say, what about my IRAs? What about my investment portfolio? What about, my bank accounts? What about my rental property? What about my vacation home? You're right, folks. It doesn't do that. And so, it's not, it has a purpose, Chuck, for sure.
Okay.
But I'm not sure that it gets us to the end all be all in doing your planning. But planning can get you there.
So in a lot of cases, even if you have one, it still makes sense to explore the other, particular if it's just the long-term care insurance piece that you have.
I would agree.
Todd, thanks so much for joining us. We appreciate it.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutzke has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still plenty more to come as we continue towards the second hour. We got a bunch of earnings to preview. Mark Zuckerberg is chatting up a storm, so we're going to talk about what the Zuck had to say. And other things that I want to get to. We've got an IPO coming up for a sandwich shop this week. That piqued my interest, being the hungry person that I tend to always be. And then we'll talk about FIFA and the World Cup and why they just can't get their hands on enough money. We'll discuss all that in hour two.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming, that might have been different had they been aware that someday, hey, this might be coming my way?
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations, because, like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Yeah, it's Chuck, it's Paul, and it's Tucker here, and we've got just like nothing really great going on in markets this morning, honestly. It's not great anywhere. It's not like awful, but it's not great. The S&P 500 down 55 points, about 0.75%. Dow was off 800 points, about 1.5%. Nasdaq Composite down 226, about 1%. So I call it a 1% sell-off that's happening. You've got the 10-year Treasury up 3.3 basis points to 4.637. So you've got bonds selling off a little bit. Gold down $36 an ounce to $4,002. Gold selling off a little bit. West Texas Intermediate crude oil up $6 a barrel to $85.29, 7.5% up. Again, there's just not anything that I can point to in today's market that's good news, and that's not great. Like you like to see something where you can be like, hey, like look at this, but it's just not there unless you like bad news. We've got a Fed meeting today at 2 p.m. Eastern. Press conference from Kevin Warsh at 2:30. We've been looking for... Have you found him, Tucker? Huh? You found Kevin?
What do you mean?
I thought you were going to go play a little sound effect there.
I can.
Kevin! Yeah, I saw you going towards the sound computer.
He's looking for a snack or lunch or something over there.
Yeah.
Kevin! Yeah. He's not looking for Kevin.
Listen, I'm hungry too. Don't get me wrong.
Yeah, I was reaching for the old apple here.
I thought that was the computer.
There we go. Okay.
No, Apple earnings are tomorrow, unfortunately. Today, though, we do have Microsoft and Meta earnings happening after the bell. And the last couple of weeks, we've seen something interesting, which is tech companies, smaller ones obviously, whether semiconductor companies specifically or ones just associated with that ecosystem, reporting earnings generally being pretty good, and then those companies just being punished. So something's up, and it's not just in the equity market. Credit default swap spreads are, moving up for a lot of the hyperscalers. You've got bonds that are selling off for a lot of the hyperscalers. And so I think it's a really interesting question as to what are these guys going to tell us about how their AI business is growing? What are they going to tell us about how their CapEx for that business is growing? And what's the market response to all that? Because it hasn't been great so far this earnings cycle.
Chuck, it just seems like it's going to be a tough putt for several of these companies to really impress Wall Street because there has been so much scrutiny on the amount of money that they're spending. Google just came out with their earnings last week. They are spending about $490 million a day on their AI endeavors. They have about $39 billion in cash that they pulled in for the last quarter that they just reported on. Still, that's $39 billion in a quarter of just pure profit coming in their way. They still were in a $6 billion hole because they're spending so much money. And the same thing applies here when you look at Microsoft and Meta. The advantage that Google has that Microsoft has some of the overlapping advantages, but Meta certainly doesn't, is that Google is pretty well integrated across the whole AI stack where they've got chips that they designed, they've got the infrastructure of a lot of the computing and the cloud business, and then they've got obviously their search products and other apps out there that are used by billions of people. When you look at Microsoft and Apple, while Microsoft and Meta, I should say, while Microsoft has the cloud computing business, that will be probably of most focus here besides the CapEx numbers that we're going to get, where they're anticipating about 40% growth in their Azure cloud computing space. But even Google came out with really robust cloud revenue, and still Wall Street was unimpressed. Really what we're looking at with the numbers on Microsoft is they're anticipating spending about $230 billion for fiscal 2027, and their cash flow, like Google's and Meta's too, it's just amazing. These businesses, Chuck, are cash geysers typically in terms of free cash flow generation, and they're spending all of that to build out these AI endeavors. And really what the market continues to debate every single day is whether or not these investments will generate a requisite return on invested capital in a probably a nearer time frame than what might actually be the case.
Yeah, that's the question. And Mark Fandetti and I talked about this last week, but it's... Ooh. Yeah, thank you, Mark. It really is this question when you talk about, that return on invested capital. It's, okay, like, show me what you are having to raise for debt and equity, number one, in order to do this. That's going to be your denominator. And if that is going up, but your net operating profit isn't, your ROIC is going down, which is bad. The other piece that we have to talk about, like last week we were just talking about, hey, if you're raising more money, but your income stays the same, like that's not great. The other piece is, hey, what if your income doesn't stay the same? Because I'm just looking at the numbers that are out there for like the next 3 years now. 2027 to 29, between your big hyperscalers, you're talking like $2.5 to $3 trillion in CapEx combined.
Yep.
The big hyperscalers have around $400 billion a year in profit right now, when you look at all of them together. And so if you just factor in the depreciation from all of that new stuff, like just from those years, not even like this year, previous years, but you look at it and you go, okay, let's say it's a 6-year depreciation schedule, which is pretty much where most of them are coming in. Well, that's $400 billion a year in depreciation that's going to be hitting their income statement. Because remember, and sorry for the accounting on the radio, but here's how it works. When we talk about a capital expenditure, the outflow hits your cash flow statement as an investing activity. It doesn't show up on your income statement then. The depreciation from that will show up as it eventually hits. And so the question that I have is, look, if you've got $400 billion in profits between all your hyperscalers right now, and within the next 3 years, they're cumulatively going to be having somewhere in the ballpark of, again, if they continue to build out in this fashion, like $400 to $500 billion a year in depreciation hitting. Well, just to overcome that, okay, and again, think of it this way. Let's say that you need to, just get back to where you were. You need to get that $400 billion in profit back from it. Well, remember, every dollar you receive from those services is not going to be profit. If you assume, call it 40% operating margins or something like that, that means you need $1 trillion in annual AI sales to be able to just break even on this from a profit perspective. And I just don't know where you're going to find another $1 trillion in sales. Like, that's the piece. That is the piece that is tough, because you need to be replacing employees in order to get to those number of sales. You can't take a $60,000 employee, bolt another $30,000 in cost on, and be like, well, we'll just raise our prices. No, like, you need to be getting rid of that employee, which is where all of the fears of high unemployment come from.
And that's where the timing factor comes into place, where, maybe these investments will generate significant returns in the future, where exactly what you just mentioned does happen. But I just don't know within the business cycle of corporations around the country that it's that quick of a light switch reaction where, okay, we've got all this compute online. Now these models are really going to evolve and develop, and agentic workflows are really going to be so pervasive that we're going to lay people off, and then we're going to get these robust sales from it. You mentioned another piece that you did the right thing in discounting down the margins on it. Google has typically operated this incredibly high margin business. It's probably one of the best businesses of all time, really.
Yes.
In terms of the way they're able to overlay their fixed expenses on basically an unlimited amount of search that's out there in the world. This business that they're going into here, that you did adjust down and say, hey, maybe it's 40% margins, but who knows, right? Like, this is much more of a picks and shovels, physical hard asset business from the business that they came from, that they built into a behemoth of a company, was on very high margins and very low fixed expenses. Now, with all the data center issues that you run into, it's a far different landscape that you're battling in. So numerous challenges, and that's why everything that we just encapsulated in this discussion is a lot of expenses. We'll see if we get the revenue from it. Probably what happens usually in these cycles is the revenue doesn't come soon enough and the market has to reprice. But that's what we debate and try and figure out every day.
Yeah.
There's always the argument that this time is different. We will see, and it'll be interesting to see what these companies come out with in terms of their earnings at the close of bell today, both of them, right? Yeah,
yes.
Microsoft and Meta, we didn't really hit on too much, but same thing. They're spending a boatload of money.
Let's take a quick break. When we come back, Mark Zuckerberg is saying some things about AI, and we'll discuss them next.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Fresh, local, in season. Celebrate National Farmers Market Week, August 2nd through 8th. Visit your local farmers market for peak summer produce, from sweet corn and heirloom tomatoes to peaches and blueberries. Every purchase supports local farmers, strengthens your community, and helps keep fresh food accessible across Massachusetts. Sponsored by Mass Farmers Markets, supporting over 200 farmers markets statewide. Find a market near you at massfarmersmarkets.org.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
Subscribe now to our YouTube page where you'll find interviews, highlights, and full shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
So, Mark Zuckerberg is a human, or at least he likes to make us think that he is. And he's been talking the last couple of days about artificial intelligence. What has he had to say, Paul?
He has had a couple of different commentaries out there. I was mentioned to you during the break. It does seem like all these public figures that are sort of at the forefront of AI are on a press tour where they're really trying to reshape the way the public feels about AI. A lot of them had come out initially mentioning their concerns regarding job destruction and sort of some of the more pessimistic things that could come from AI. Kind of like clockwork over the course of the last 3 to 6 months, or maybe a little longer than that, you've seen, executives like Sam Altman and Zuckerberg as well, basically stating that they want intelligence for everyone and that they feel as if it can create a lot more jobs and not destroy jobs in the economy. And ultimately, it's hard to take what they're saying at full face value because they are sort of incentive to shift the narrative around AI in general. But recently, he has had some commentary, Mark Zuckerberg, saying that in terms of AI development, like a lot of tech executives from the Silicon Valley area, they don't want government interference. And
well, of course they don't.
Exactly. So again, all of these commentaries, they're self-serving, right? They're spending $140-something billion in CapEx to build out their AI capabilities. They don't want anything to impede its progress. So having a 30 or 60-day review on new models by the government, even though Meta doesn't really have one that's at the frontier, that is a detriment to their business. So of course they're going to side on that front of not having too much government interference. And then also he has some commentary in here basically saying that we should not ban Chinese AI, which has sort of come out as distilling some of the US models to produce open source models that kind of everyone can see. They're not proprietary. And that has become headline recently as well.
So there's a lot to unpack here. trying to think of where I want to start. Let's start at the beginning. Is Mark Zuckerberg a trustworthy character?
Not particularly.
I don't really think so. When it comes to how he's handled the burden of being one of the stewards of technology in the United States and in the world, I don't think they've done a particularly good job. Facebook has continually not really cared about privacy, security. These types of things have been secondary concerns to them for a number of years. So I approach everything regarding Facebook and Mark Zuckerberg knowing that history, because you can't just discard it. It matters. There's a big difference between like Mark Zuckerberg telling you something and Mr. Rogers telling you something. Mr. Rogers, you're like, that dude is speaking the truth. Mark Zuckerberg, you're like, yeah, but what do you really want? Like that's how I feel, at least. So, when did Mr. Rogers die?
I was going to make that correction. Just, probably
15
20 years ago.
Yeah, it feels like that. It's been a minute.
2003.
Still has a show that's like of his
Daniel
affiliation.
Tiger.
Yes, Daniel Tiger. My kids are fans.
I'm a fan.
I'm a fan too.
But so I think my first thing is, okay, it's like, what are you trying to get from me, Mark? And it very clearly seems to be, hey, I want, Mark Zuckerberg is saying, y'all stop paying so much attention to what I'm doing. I just want to go do it. And like you could buy that if it weren't like, okay, but you've done these questionable things before. And even as it relates to AI, it was about a year ago that we covered the fact that Meta had outlined the acceptable sexual topics for its chatbots to flirt with 13-year-olds using. And we were like, this is kind of problematic that they thought about this and still said like X, Y, and Z is okay. Like this is not great. So I look at this and it's clear that Mark and the other AI guys want the federal government to not regulate them in any way, shape, or form, which is going to work fine right up to the point where AI agents developed by these companies start attacking, other websites and things like, the OpenAI one that apparently was just walking around the internet for 4 days and actually attacked 2 websites, not just one. And remember, these are the worst AI models and agents that you will ever see for the rest of your life. Everyone that you see from here on out is going to be more capable, faster, smarter, better at doing what you tell it to do. And so I got to be honest, I continue now to get to the point where, look, the only thing that's going to make people change their minds about this is when an AI agent does something that costs billions of dollars to people or millions of lives. Because that's where we're heading. It's, you ask the AI agent, hey, help me, acquire more assets for my asset management firm, and it goes and robs all the banks. Like, and it's like, I thought you wanted to get more money. It's like, yes, I didn't want you to, hack into JP Morgan and take all of the money. That's not what we intended here. Or the guy who's, running the nuclear power plant. Hey, can you, make this plant, operate as efficiently as possible? Great, we're going to shut down pull the control rods out. We don't, again, this is where we are heading eventually, is if the smartest people who are developing these are finding that they can't control them, then the not smartest people that are given more advanced models are not going to be able to control them appropriately as well. And there are going to be negative consequences. This is before we even get into, did you see Willie Nelson yesterday?
Mm-mm.
You big Willie Nelson fan?
Not against him, but not a huge fan.
Sure. So Willie Nelson, not exactly, someone who you think of as like
on the cutting edge.
Yeah, exactly. Willie Nelson put out a whole statement yesterday, basically like, hey, I don't want any of these data centers in rural America. Rural America does not belong to tech companies, and I don't want them there. That's where this discourse has gotten to at this point. Like, Willie freaking Nelson is chiming in on it. That's how much this stuff is hated. And that's the other piece that I get to. When's the last time you had like a popular technology that everyone was just like, oh, I hate this? It's social media. And that hasn't exactly worked out great for us either. Let's take a quick break. When we come back, we got Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing and Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in sell-off mode ahead of a busy afternoon where the Fed will announce a decision on interest rates at 2, followed by tech earnings from Microsoft and Meta after the bell. Furthermore, oil jumping higher after Iran targeted a U.S. base in Jordan. Right now, the Dow is down 1.5% or 794 points lower. S&P 500 down about 0.8% or 59 points lower. NASDAQ down over 1%, down by 269 points. Russell 2000 is down 1.2%. 10-year Treasury yield is up 3 basis points at 4.63%, and oil jumping over 7% higher, trading at $85 a barrel. Procter & Gamble reported second quarter earnings that beat expectations but came up short on revenue as underwhelming demand for its products weighed on sales. That stock down by 2%. Meanwhile, shares in sneaker maker VF Corp sinking 16% after the company said Vans sales in constant currency fell 9% in the previous quarter and are expected to decline by roughly the same amount in the coming quarter. And Humana reported second quarter results that topped estimates as the health insurer's spending on medical services came in line with expectations. The company also maintained its 2026 adjusted profit outlook. Humana shares down by 6%. I'm Tucker Silva, and that is Wall Street Watch.
Paul, we got some earnings data from Ford yesterday. What did they tell us about how people are buying big metal things with wheels?
Ford sales and revenue were down, but the stock did jump up because their earnings did come in higher than expected. Really what they're seeing here is they had to deal with the fallout from one of their suppliers of aluminum that had a fire at one of their facilities. That really made for the first half of 2026 to be weaker than perhaps anticipated, as Ford's sales fell about 10% over the course of the first half of 2026, but they are continuing to see a lot of sales volume in terms of their sales for the off-road SUVs and truck variants. That accounts for about close to 20 to 25% of their U.S. sales is on those bigger vehicles. Generally, from the auto market, there's been a lot more focus for customers to be a little bit more cost conscious. You've seen compact SUVs increase about 23% year over year in terms of their sales, according to last month's data, whereas full-size pickup trucks in that same span of time have only increased about 2.5%. You're still seeing the average transaction volume on a car sale of about $50,000. So a lot of people are opting out to be in that used car market. But in terms of Ford, it does seem like they were able to increase their profit forecast for the year. So their stock was up, I believe, about 6 or 7% over the course of yesterday here.
Folks, the Armstrong Advisory Group has a guide available this month. It's titled Talking to Your Kids About Inheritance. And it's pretty easy to request it. It's all about, again, exactly what it sounds like. How do you talk to your children about what they may or may not inherit? Because, whether you have plans for a large inheritance for them or there's not going to be much available for them, having those conversations before you pass beats leaving them with a big question mark that they have to answer after you've passed. So, to request the guide, you can call 800-393-4001. You can also go to armstrongadvisory.com and request it there. Again, that phone number is 800-393-4001, or go to armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Paul, I want to talk about FIFA.
All right.
Okay. FIFA, for those of you who aren't familiar with them, they are the fine folks who put on the World Cup that was fantastic for, 6 weeks this summer.
World Cup was fine. Debatable if FIFA often gets categorized as fine, though.
Well, and this is the thing. I think one has to hold two distinct views in their head, which is, man, that World Cup was awesome, and wow, those little, money-grubbing FIFAers are just, I can't stand them. And here's the latest in terms of what they are trying to do. So they are trying to reportedly take on external investors. They want to spin off the World Cup and other assorted events from FIFA into a separate entity that then they can attract outside investors on, so they can take some of that outside investor money and use it to effectively bribe small countries to go along with the plan, because the way that the FIFA voting works is one country gets one vote, regardless of how big you are. Which is, again, I'm not saying that this is that's inherently a problem. What I am saying is a problem is that, hey, if you pretty much tell smaller, less wealthy countries, we can give you sums of money that are big for your country, you can get them to go along with doing lots of things that are bad for the game of soccer. Mm-hmm. This being one of them. Do you really want the World Cup owned by private equity firms? I don't. That just means the tickets are going to get less affordable, the quality of the product is going to go down, and you're going to end up hating it down the road. So I'm really kind of hoping that this doesn't end up happening. It probably will, just like most things that I don't like in this world, and I have to deal with that because I don't really get to choose the world that I live in. I just have to navigate it.
We can all agree it was an absolutely tremendous tournament. I think a lot of us got a great deal of enjoyment of it, even if you weren't a big soccer fan. Just some of the cultural sort of meshing points between, the Boston area and Scotland. There's numerous other examples of this throughout the United States. That aside, it does seem like whenever you have these live rights deals, and FIFA's just as guilty as this as anyone else, NCAA to a degree too has had this stance. They've been talking about expanding the World Cup in terms of teams.
They already did this year.
Yeah, further than what was this year, and this would probably cement that, I would imagine, is that these private equity investors would want to see basically more games packaged together so they could sell them at a bigger bundle price. And while the tournament this year worked fantastic, even its expanded form, and there were some questions as to whether some of these countries would be able to compete on the world stage, I think largely you didn't see as many blowouts that were potentially anticipated. I believe it was it 42 that it settled at? What did it
number of teams? 48 this year.
48 this year, right? Yeah. And they're talking about jumping it up to 64 in the future. It just, you got a great thing, don't mess with it. But once you get people trying to open up their pocketbooks to grab some money out of it, you get very skeptical if they can keep that momentum going.
I don't want to be a billionaire. I'm not, but I don't want to be one. But if I were, what I would do is I would actually go around and buy up the things that people like and then keep them the same. I don't need the money at that point. And to be honest, that's kind of what billionaires used to do a long time ago. You think about some of so many great museums and things that exist in the United States. It's because, granted, wealthy people who probably made their money in ways that are not so great.
Rockefeller's a good example of that. There are a lot of business practices that you could absolutely question.
Correct.
But if you look around New York City, a lot of influence, and one of the greatest charitable donors of all time.
Correct. It didn't he didn't spend his money going towards just, I need to make more money with all of this. Was, no, my company's making way too much money. I need to do some things that might be good to probably burnish his image a little bit, but also hey, maybe he wanted those things too.
He believed that with business that you had this sort of requirement to be philanthropic. Again, you can push back against some of the business practices that got him there, but he was very philanthropic with his all the money he amassed.
But like, let's say that I had $100 billion. Would I buy a sports team? Darn straight I'd buy a sports team. I love sports. You know what I would do with it? Your beers, $2. Your hot dogs, 50 cents. I don't need the money. Okay, like I don't need the money at that point. Why you got to have the hot dogs be $12?
Well, because business is business, Chuck.
Oh,
just being a businessman.
Tell me why. Okay, so the premium beer is $19, but the regular one's $17.
That's just what the market dictates, Chuck.
I get it. I see that, and like it's just ridiculous. Like I just don't understand. At some point, you just got to be like, enough's enough, man. And I get it. Like supply and demand. Like there's demand for this, and so they charge it. But you've got more money than you're ever going to spend in your life, and you really just need to be like, well, we got to get the ROI this year. So that enough. I'm sick of it being like the only driving force. And look, I say it with sports, but it's freaking everywhere. Like eventually, don't you just have enough money?
No.
You know, I guess not, but I don't know. Like if I were a $100 billionaire, I would buy up all kinds of cool stuff and then make it exactly how people want it. That would be my platform for becoming a $100 billionaire. I don't know how you, like, it's not like you vote me that, but
even like on a small, there's examples out there, and I think you're right. It does date back to not this recent history where like the Patagonia CEO bought millions of acres of land in Chile and Argentina in the 90s and just gave it back to the federal government to make it as parks and land. And there are numerous examples of this. Seems to be less of that occurs now.
It's like we just think it's like so cool to be like, nope, I'm just going to keep making more. And it's like, okay, like eventually like enough's enough. I don't know. I want more millionaires, fewer billionaires, but that's just me. Let's take a quick break. When we come back, we'll do Stack Roulette.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register today for this year's DAV 5K. More than 800 runners have already registered. And the race is Saturday, November 7th at Fort Independence on Castle Island. Registrations are on a record pace, so if you want to participate, head to dav5k.boston and sign up today, or please consider making a donation. Your gifts help provide vital services like free transportation to medical appointments and safe housing. For single veterans and their families, donate today at dav5k.boston. That's dav5k.boston.
Paul, what do you got for Stack Roulette?
Chuck, want to check in on Nike a little bit. In particular, Nike's business has struggled all across the globe over the course of the last few years or so. They've had a couple CEO changes to try and turn things around. But in particular, one area that they've really struggled in is selling in China. Their sales have fallen about 30% since 2021 in China. And Mike and I were talking about on the show yesterday just which businesses have been able to make significant inroads, which U.S. businesses have been able to make significant inroads in China, and his argument was that very few have had long-term
don't know.
Thank you, Mike.
He thought that he did know that, very few businesses have had long-term success in China, and that prompted me to sort of think about that along the lines of Nike, and just did some quick searches. KFC and Yum Brands was probably the most successful one that has kept longer term inroads there, because we had covered yesterday Starbucks had basically shut down its China operations, and now you have Nike in sort of a free fall there, where they did $8 billion in annual revenue in 2021 in China. That number is projected at close to $5.8 billion in 2026 for Nike. Just pointing to the struggles that Nike has had. They really took their eye off the ball over several years on the innovation front and just kept kind of running out their same tired IP of releasing these rare sneakers, and ultimately have had a long haul into trying to turn around their business. And the China market seems like an area that they are just really struggling to make any progress.
I want to talk a little bit about DoorDash. They announced yesterday that they have gained approval from the FAA to commercially operate a drone delivery system. I got to tell you, I think this is a bad idea.
You've been always very anti anything in the sky.
I'm very anti-drone because I believe that the skies need to be free. And it's one thing when you see, a couple planes at 30,000 feet and this and that. It's another when you've got 400,000 drones zipping around at 5 p.m. around every city because every house is ordering DoorDash and these things are like blanketing the sky and you can't see if it's sunny or cloudy out even. So I've got kind of a problem with this. Additionally, even beyond, just like the visual aspects and the fact that, hey, maybe like occasionally a burrito falls out of the sky or something like that. Look, I got to tell you, all the people who are like, oh, like I can work DoorDash, instead of, filing for unemployment. Gee, it doesn't seem like that's going to be a possibility much longer. Now, I don't think that that's a reason to not do something. Technological progress always eliminates jobs, and we always find new ones. But I got to tell you, I'm just not a fan of this. I don't want things. I don't want thousands of things in the sky bringing stuff to people.
So, as part of the FAA approval, it grants the company the ability to operate the drones, quote, beyond visual line of sight.
Exactly.
So, they won't be seen, or
no. That means that like the operator doesn't have to see it.
Okay.
So. No,
they could be remote, directing the
it's
flight
saying
path.
that like they could be directing them from like 20 miles away. It's not saying that you won't see them. It's saying the drone operator does not need to be able to see them in order to do this.
This and autonomous driving have been
autonomous driving. I'm fine with.
I'm just saying, like, these have been talked about for the last 10, 15 years and haven't made significant inroads. I get it. Waymo's around, and there's maybe, I think they're projecting 18,000 autonomous vehicles in the U.S. in like the next year or so, but still a small fragment of the overall auto market. The same thing here, I would imagine, on the drone front. Yes, they've allowed them to, but it just doesn't seem like this has made tremendous inroads. So I have a degree of skepticism as to how frequent and prevalent this will be because of the FAA. You would think trying to be a little bit more measured in terms of how many drones they're going to allow to fly around.
I hope so, because this is basically my nightmare. Here's the thing. If a car breaks down, pulls over to the side of the road. Mm-hmm. If a drone breaks down, it crashes out of the sky.
And could hurt people. Yeah.
And it's just like the economics of trying to make this work means that you probably have to build the cheapest drones possible if you're delivering, $4, coffees and stuff like that. And so
I hope it's not coffee.
Only iced. Only iced.
What if it burns the drone?
Yeah.
Ouch, please don't do that to me again, Tucker. Now, the one thing I'm not concerned about the more I've thought about it is people, like, misbehaving with the drones. Because if you do that, like, if you, like, knock it out of the sky or,
you
like...
get your finger chopped off is one thing.
They're just not going to deliver to you anymore.
Oh, yeah.
Like, they'll just be like,
no,
fine.
But what if you're just, like, a jerk, around the corner who just wants to take a bat?
Give the drones tasers. I'm fine, like, arm the drones. Like, this is where we're heading anyways.
So many problems.
If I'm not going to have a say in it, then just go all out at this point. My goodness, what I wouldn't give to be born in 1867. Quick break here for the rest of the day. Fed